Welcome at forextrading.com. Today is 2nd September 2011. There's a weekend, Saturday, so we have a short time to show you the real life trade examples. Exactly, we are talking about review of the trades because there's so many things happening right now and there's so many trades in short time that I wouldn't have real time to show you each of them separately to place it at the website and show you exactly what I'm talking about. So right now we are talking about the gold 1 hour chart. So the big chart at 4 hour looks like this. We are talking about the big correction, aggressive wave, ABC kind of style, and coming back to the growing trend. We were not sure if the market's gonna hit the new highs to see 1900 again. But looking at the 1 hour chart, it was pretty much obvious that we have strong buyers coming in at the market, no sellers, and another buyers coming in. So when I see no sellers again and some stronger buyers coming in the market, it is natural that the market's going to come back to the growing big trend, especially the fundamentals and technicals are showing at the goal that this price behavior might be true comparing to fundamentals. So people, traders are not sure how the situation with S&P and Nasdaq and other indices and global and US economy will survive next months and the next year. So that's why the price chart of the gold might be growing aggressively. That's what I was thinking, placing the first trade right here. So it was the biggest entrance into the market, a buy position that was very accurate. As you see at the market shoot out in the sky, it came back, so we had to stay with the longer stops to see what's going to happen. The market showed us after some correction that it doesn't have any stronger move, any stronger sellers anymore at the market, so it still had the bigger probability of going up to see new highs, and it break out aggressively again. So the next market entrance were somewhere around here. I've marked it at demonstration account, but it was a little bit different, just few ticks different at the live trading account. So the market wanted to break out aggressively, but didn't have enough strength at this time. The stops were placed somewhere around below recent correction wave, so it was pretty much safe that market will not clean this position out before the rally starts. And then we see the another attempt of S&P 500 and other indices to go down, and gold shoots in the sky aggressively. So when I see this kind of behavior, the market broke 50% or 60% of this wave movement, and we see it at Fibonacci 61.8 level right here, and market broke out through the important support resistance line, which is right here. I'm showing right now. It is visible also at a 4 hour chart. You see this green line right here, very important place. So I was sure that if the market break out to the upside, I'm going to be interested in going long to hit another position, add to the things I'm doing right now at the market. So I entered at the market once again. The market hit new highs. I came back a little bit and I was like, I want to be in the market right now with this high stop loss because it's investing position. So right now we are discussing an investing strategy at the trending position instrument. So we are talking about the trending position instrument that will be probably hitting highs like 1900, 2000 per ounce and maybe much more. So this thing I'm showing right now is very different from day trading for catching short small waves at euro dollar chart, especially and different instruments as well, because you see at 4 hour chart and 30-minute chart at euro dollar, you are focused to catch as much as you can during the day. So you're entering the market and you looking what's happening, and you're taking the profit from the market as soon as possible, and you can let it run like the other half of the position, but it usually it's not that safe with the other part, but you can let it run and see what happened. Like here, it dropped down to hit some new lows, but you are catching those strong moments when the market is breaking down. So it's rather catching the momentum instead of riding the investing wave with the trend, with the serious trend. So let's see at 1 hour S&P 500 chart what happened right here, because we had some strong, nice situation for day trading position. And starting uh, where are we gonna start right now? I think the last week was starting the movement somewhere around here. I mean, my trading movement. When I entered the market here, the market was really didn't have any sellers coming in at the market, and it was reaching the position that was showing that might be shooting up. Rally might be beginning, especially before the market was uncomfortable at this position. And here we see by many candles that the market is feeling strong. It's feeling good at this position, at this line. So it would be very probable that market is going to hit new highs. So I entered a long position with really short stop loss. So it was a kind of wise movement from this side, that the stop loss was very short, like 40 pips, for example. And the market movement, you could take 150 points very, very soon. So I've stayed with this position and I was adding to the market another time. Unfortunately, this position right here had to be closed at zero break-even point right here, when the market didn't have strength to go up and didn't have strength another time to go hit the new rally. So it was showing us that we might be seeing a trend changing situation. So it had to be closed with break-even point the second time I've entered the market. And this position from here had to be closed as well. But soon after that, the market show us is breaking down from the support resistance, this green line right here, and it was wise to enter position right here with the very short stop loss, which I did not. I was really concerned if the price action will show us if the market's dropping down aggressively, but it didn't. But I could enter the market anyway. But I was a little bit shocked that the market didn't go through with the other two of my positions. I mean, it was an emotional shock that every time the market's closing your long position, it takes sometimes few seconds, sometimes few minutes, and sometimes few hours, few days between before you can take short position. It's kind of emotional problem that if you're staying with long, it is more difficult sometimes to hit the shorts again. But I've seen the market test at this point. It was beautiful momentum to enter the market at 1 hour chart. So to enter the market and catch some wave like 100 or 200 points. But the market next day, it was evening in Europe, so it was kind of just before market closing in US. The market started to move down, and it did a testing of 1200 points. So we see 1200 line right here, and the market tested it. As you see, not too many buyers coming in at the market, and it hit aggressively, more aggressively, a little bit lower. So I entered the market right here, which you can see as this green line at 1195, somewhere around this level, with a stop loss just above 1200 line. So it was kind of a copied move from before. So I see the situation second time, and I was like, I have to use it. If I didn't use it before, I have to use it right here. Very short stop loss, like you see from, for example, 1197, when I exactly entered at the live trading account. It took like 60 points to 1203 points to make it sure that stop loss, if the market's going to break out again to the upside, it's going to be closing our position that we do not really want it. But the market hit new lows, and we could take this day was finished. The first part of this entrance was closed somewhere around here. So we are talking about 230 points of the profit from first part of the position. So there was a few more actions in time, not that spectacular, short in time actions which finish at break even or little, very little profit. The risky trades I'm not gonna discuss right now. I wanted to share with you just a few serious point we stated at the market by entering at the market to show you that you can take care of those technical analysis and fundamental data in the way that might be showing logically that market's going to hit some lows or straight go in the sky, really like the gold did some moves at Friday. So thank you very much for listening. I hope you to see you at forextrading.com. Thank you.